In my last analysis, I talked about this being the first bottom here, and this is that second bottom. And BTC came down here to sweep this liquidity over here. And after this, we got a retest to that point of control zone. And from there, we have plummeted to the downside, taking the support on this SMA. This is a 200 weekly SMA. And from there, we have gone higher to take the retest of this value area low. And after this, we are just back below again, sweeping this liquidity, where we made this bottom over here as the third bottom. And I have also spoken about this in my last video here on the bull market top theory. If you have missed out that video, you can go and check it out. I said that this was the first top, and then we came back and swept this liquidity second time, and the third time was the final top, where we then moved towards the downside. So since we have swept the low once again, is it going to be a full-on reversal and we are going to go higher and maybe have another all-time high? Or this is just going to be a dead cat bounce, and then we will finally continue with our bear market trend? Everything will be packed into this short video, and after today's video, you will have a clear direction to this market. So let's jump in. If we check the liquidations, we have $1.1 billion of liquidation, and the majority is coming from the long side. 24 hours volume is 257 billion. That is plus 6%. Open interest is definitely lower. It seems to be 2.83% lower. And if you see the long and short ratio, we are kind of balanced because short shows around 50.37% and 49.63% is a long side. So it means the long and short ratio is already balanced. And if we check fear and greed index, we are having 13 on the reading, and yesterday it was 12. So extremely fearful market at the moment. And let's check the liquidity levels. So this is 1 year liquidity level, and you can see the bunch of liquidity is laying around this zone, guys, here. And the brightest zone is around 84K area, and definitely we have a higher liquidity as well. But if you are a market maker and you are already at this zone and there is a bunch of liquidity laying here, what would you take first? If we check this 3-monthly liquidity heat map, then you can see it very clearly. Here, this is the zone here around 98, 99K zone. The brightest area is around that 83, 84K zone here. But again, you have a bunch of liquidity laying down here, and this is very near for taking. Maybe we will have a slight up move, and market maker would love to have the liquidity brighter over here, where the bulls can take the bullish side, and then the market will be flushing them one more time, probably this time clearing up all this liquidity and sending the price up higher. If we check the news, we have nothing for today because we are already on Friday. Saturday, Sunday, there won't be news. And next week, if we can see, we have ISM manufacturing on Wednesday, and Thursday we have a non-farm employment change and unemployment rate, which is 4.3% now. So there will be volatility on Thursday. So coming back to this 4-hourly time frame, I think I have spoken multiple times about this being a 1-2-1-2 structure here. So if this is a 1-2-1-2 structure here, and this was the third wave down, where you can clearly see that we have a spike in volume that shows that this could be a third wave or a wave C. So if this is indeed a 1-2-1-2 structure, then we could be having 4-5, 4-5, 4-5, multiple 4-5s. So those 4-5s are far in future. So we will talk about only this structure over here. This is going to decide whether we will get a move up higher here, or it could be just a dead cat bounce, and then we could be moving downside. As of now, I see an ABC correction to the upside here as a 3-wave move. This could be a ABC move to the upside. This is clearly 3-wave structure, guys, here. And what do we see right now is also a 3-wave structure. So that makes me understand that this could be a 3-wave move. If this was indeed a 1-2-1-2 structure from here top, so we have multiple 1-2-1-2 structure, which means we will have to finish these 1-2-1-2 structures into 4-5s. So if this is a 4-5 here, where we finished 3 in here at this zone, so if this is a 4-5, we are expecting either this is already done here as a ABC, because proportionally for this 1-2, this 3-4 looks very good. But we could be doing like this could be only A move here, and then this ABC correction as a B move, and then we would have a C wave to the upside. And this C wave could be a flat, because this is clearly cannot be a WXY. A WXY can have multiple 3-wave structures, not multiple, because WXY is only 3 waves. So within that 3 waves, internally, we could be having ABC. If you are confused with these flats or WXY, then please go and check the tutorial video which I made on Elliott waves. And this is very informational video for beginners. And you would understand a lot when I talk about this WXY or ABC flats. So the WXY, when I talk about this, the X wave over here, this could not be taking out the beginning of this W move. So the WXY is out of the window here. And now we have to talk about this being an ABC. A flat move could be an extended flat. This is a good extended flat here because we have extended this move beyond this beginning of this A move. So that means that we have cleared the liquidity here down, and now we could be clearing once more this liquidity over here, where when we do such kind of move, when the market makes this kind of move, it would make the bulls to be bullish once again. And once the bulls are bullish once again, then the market maker can send this price towards the downside. Some traders call it manipulation, or some traders who understand the Elliott waves, they call it, flat or extended flat or a running flat. So we will have to check at this zone at the moment that whether we can get this extended flat here or just a running flat, and then we are moving towards the downside. At the moment, we have already finished that A and B wave of a flat correction. Now we are looking for that C wave. So once we are into this smaller time frame structure here, because this is also a range, what we are seeing right now is a sideways chop, and we will use the volume profile here to understand if we have such levels where price can go higher and reject. At the moment, we are rejecting from this zone. If you can see, this was the bottom. We come back up. This is the value area low, and we are rejecting at the moment. This would not be a final rejection. But what we can see for a flat correction, when we talked about in higher time frame, that this could be an ABC correction. So we might not be having a running flat such short over here. This could not be the C wave. We might be having C wave might come up higher for this point of control and rejecting from here. Or we might be getting that value area high rejection. If this is a running flat, this would be the place where it should reject. If not, then if it's an extended flat, then definitely we are coming up higher here and clearing this liquidity. Now let's mark out this fib levels from this top here. This is the A top to the B bottom. And now we can see that we have the clear levels here, and we will have to check the confluence. More the confluence, more the possibility of having the rejection over here. So now that we have marked out our Fibonacci levels, we have a volume profile, and we have the wave structure already placed in. What do we see here? The minimum retrace for a C wave is 0.382. 0.382 is definitely higher than this value area low. And if you can see exactly what do we have here, this is a 0.5 area here, and the POC comes around exact that 0.5 area, guys. So this is the highest. This is the first place where I can think about shorting, because this confluence lining at the same zone. 0.5 zone with the point of control. This is the strongest level where we can get the rejection, because in higher time frame we have already got the rejection at the POC, and then we came back down and got the rejection at the value area low. These are the higher time frame volume profiles. Now what we have is value area high. This is the mini range of value area high. This is that POC, point of control, and we have this value area low over here. So value area low is out of the question, because the minimum retrace for an ABC flat is 0.382, and 0.382 doesn't have any other confluence here. Of course, we have that 200 weekly SMA, but this is slightly higher than 0.382. So that means we can have the most beneficial zone for us to short is around this POC, and that is also lining up with that 0.5 zone. And the second area where we can look for is that 0.618, and 0.618 is very near to this value area high at this zone. Okay, so these are the zones. If I see that this ABC is being just a running flat, then I would be interested in this zone for shorting. And if I see that this lower time frame move up is stronger and we might be having more higher push to the price, then maybe I will be thinking to short once we sweep this level over here as a flat correction. And for that reading, we will have to use the fib extension tool to use all the way for this A top from the bottom and then drag it down to this B bottom. And then what we can see here is one-to-one correction comes around this 66.276 zone. Do we have any other confluence here? Yes, we have. That is the point of control from the larger range. Dot 786 comes around 64.5k zone, and that is around this value area low. And if we are expecting this C wave to be extended to clear this liquidity, so the next level comes around this 1272 zone, and that is around 68.5k zone. So these are the levels I'm watching for right now, and we might have a small move towards the upside to have that running flat or an extended flat, and then eventually the market will continue its own trend, and that is downtrend, guys. So that's it, guys. That's analysis for today, and this is the short video. I hope you enjoyed this content, and if you do like this content, then like and subscribe. I will see you in the next video. Bye bye.